Good evening. I'm Nima, and this is Forum Daily for Thursday, September 22nd. We begin tonight with the latest moves by the Liberal cabinet to address mandatory pandemic measures. Prime Minister Justin Trudeau agreed today to let a cabinet order enforcing mandatory COVID-19 vaccination requirements at the Canadian border to expire on September 30th. The federal government is still deciding whether to maintain the requirement for passengers to wear face masks on trains and airplanes. Before today's decision, Mr. Trudeau said he and his Liberal government will continue to follow the advice of public health experts. Meanwhile, the federal Liberals say banning Russians from visiting Canada would trap dissidents who want to flee their country. Foreign Affairs Minister Mélanie Joly says she doesn't want Canada to follow European countries in barring Russians from getting visas. Ms. Joly says Russian President Vladimir Putin's move to recruit more troops for his war in Ukraine is putting Russians at risk. She says her top concern is Russia's plan to hold votes in parts of Ukraine that it has occupied, which is likely an effort to have them join Russia. The Parliamentary Budget Officer estimates proposed new federal taxes on some financial institutions could generate $5.3 billion over the next 5 years. Two new PBO reports calculate the expected revenues from the Canada Recovery Dividend and a proposed permanent increase to corporate taxes on banks and life insurance groups. Finance Minister Chrystia Freeland is also proposing to hike the corporate tax rate on bank and insurance profits over $100 million. Now, this is a move that the PBO predicts would generate $2.3 billion over the next 5 years. On the East Coast, Hurricane Fiona is forecast to bring severe winds and heavy rain to Atlantic Canada. The storm is heading north and expected to pass through the eastern mainland part of Nova Scotia, Cape Breton, and Prince Edward Island on Saturday. It's expected to reach the lower Quebec North Shore and southeastern Labrador early on Sunday. The PEI government is urging people to prepare for Hurricane Fiona. This includes checking smoke and carbon monoxide alarms and practicing safe generator use, as well as taking extra care when handling candles or cooking appliances during power outages. All right, turning to the latest release of the 2021 census data, which shows the Indigenous population is still growing, although the pace has slowed. Statistics Canada says there are 1.8 million Indigenous people in the country. Now, that accounts for 5% of the total population. The Indigenous population grew by 9.4% from 2016 to 2021. Now, this is almost twice the pace of the non-Indigenous population. And almost 1 in 6 Indigenous people lived in a home in need of repairs in 2021, which is nearly 3 times more than the non-Indigenous population. A Canadian respiratory researcher is recommending long COVID patients see a specialist to test for signs of autoimmune disease. Manali Mukherjee with McMaster University led a study that shows that some people who still have symptoms a year after a COVID infection are showing signs of autoimmune disease, like rheumatoid arthritis. The research builds on studies in the United States and Switzerland. All right, moving to Quebec now, where party leaders will face off a final time ahead of the October 3rd election during a French-language televised debate tonight. The incumbent Coalition Avenir Québec, led by François Legault, continues to enjoy a solid lead in the polls. And the other 4 main parties are in a fight for second place. This comes with just 11 days left before Election Day. The debate, hosted by Radio Canada, offers a final chance for the Liberal, Québec Solidaire, Conservative, and Parti Québécois leaders to pitch to Quebecers. Major humanitarian groups say Canadian sanctions are blocking their response to a humanitarian catastrophe in Afghanistan. They are urging Ottawa to loosen its restrictions on working with the Taliban, which took control in Afghanistan last year. The Canadian Red Cross, Oxfam Canada, and Amnesty International are among 18 groups who are arguing that the Trudeau government has fallen behind its peers when it comes to finding loopholes for humanitarian aid while isolating the Taliban regime. A long-awaited review of the government's cannabis legislation is in the works. Federal ministers were set to launch an investigation today into the impact of legalization on public health, youth consumption, and Indigenous persons and communities. A 2018 legislation lifted prohibition on the recreational use and sale of cannabis, but it came with a provision that the Liberals review the law after 3 years. Now, that review is nearly 1 year overdue. Stay with us. More news from around the world coming up next. Stocks fell on Wall Street and added to weekly losses for major indexes. This comes as central banks around the world hike interest rates to fight inflation. The S&P 500 slipped 0.6% on Thursday. The Dow Jones Industrial Average and the Nasdaq also fell. Central banks in Europe and Asia raised interest rates a day after the Federal Reserve made another big rate hike, and it signaled that more were on the way. The goal is to cool down economies by making it more expensive to borrow money. Meanwhile, investors continue to deal with the fluctuating market amid inflation and interest rate hikes. Well, joining us now to give us his outlook on the markets at this time is Brendan Caldwell, Director of Caldwell Securities Limited. Brendan, welcome back.
Thank you, Nima. Great to be here.
Now, it's not all bad news on the stock markets. We know technology stocks are bouncing back after a major sell-off earlier in the year. So do you think this is the end of the downward spiral for them, or maybe just the beginning?
Yes, I think both. I think there's going to be a bifurcation, a split between technology stocks that deliver the goods and those that are just fluff and air. It'll be harder to tell what a technology stock is in the future as more and more companies adopt the technology. I mean, if everybody's a technology stock, perhaps nobody is. But those traditional, if you can say that, names like Microsoft and Apple that have both earnings and dividends to back them up, I think will continue to go from strength to strength, even if in the short term the market is volatile. Whereas companies where they are trading at very large multiples to either current earnings or in many cases the hope of future earnings, I think they're going to have a harder time for longer in a higher interest rate world.
Now, meanwhile, these continual interest rate hikes have made bond returns competitive with stocks. So what does this mean for investment portfolios, Brendan?
Well, bonds have not been a great investment for a long period of time, for at least not for the individual investor, because you look at a bond, you can say we're getting 1 or 2%. Now investors look at bonds and say, well, I could get maybe 4%. Well, that's really good. Now, it takes a long time for people to adjust to the new reality. And while interest rates have gone from 1 or 2 to 3 or 4 or more, inflation, as we've seen, has gone to 7 or 8%. So when interest rates were down at 1 or 2, inflation was there too. But now inflation is at a big premium, or almost double in some cases, to where interest rates are. But investors are still going to be looking for those higher rates. So, 4%. Well, that looks great. Let's give me some of that. I think the key will be to be in not so much fixed income, but income streams that have the capability of growing. Because I do not think, despite the central bank's best efforts to raise rates to slow down inflation, that inflation is slowing down anytime particularly soon.
All right, Brendan. Well, with higher rates and potentially slowing economy, how will companies grow their dividends?
Well, it's an interesting time right now, because for the entire 30 years I've been in the investment business, companies have not really had pricing power. They have not been able to ratchet up their what they charge the consumer. The only way they could the only way they could increase their profit margins was to cut costs. So to be able to get some traction on the pricing side, I think that will be helpful because they can say supply chain, they can say inflation. I think consumers are more willing to accept higher prices, especially in an area where there's a shortage. So I think that's going to be helpful. I think dividends are going to be key, because they will be the increasing revenue stream that I think that even though you've got a company that's got 2 or 3% dividends, you think, well, maybe I should buy a bond that has a 4% interest rate. But those 2 or 3% dividends, if they are able to grow over time, will look an awful lot better longer term.
All right, Brendan, about a minute left here, but what is your overall outlook for the markets during inflation and interest rate hikes?
Well, I think that there will continue to be a lot of volatility because more like what we've seen this year, this market is not at all certain, but all that's known is largely priced into the markets. We think that interest rates are going to continue to go higher. We think that central banks are going to continue to raise rates, and the markets are where they are. So if we got any good news, if there was a resolution, a reasonable resolution to the war in Ukraine, if inflation numbers looked more tame than what's being projected or what we're seeing right now, if a shred of good news would actually, I think, give the market an unexpected lift.
Welcome back. Now it's time for Forum Daily's weekly market update with Catherine Murray, host of The Buck Stops Here. Take it away, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. Well, we are seeing the markets trade lower following 1% declines yesterday, driven by the U.S. Fed raising rates by 75 basis points. That was expected, but perhaps what was not expected and therefore impacting the markets negatively today and yesterday is the hawkish tone coming out from Fed Chair Jerome Powell, indicating that they are not going to stop raising rates. In fact, Fed Chair Jerome Powell said that there's a risk, if you look back historically, at loosening prematurely. They also indicated that the terminal rate is going to be higher than previously anticipated. The terminal rate, in other words, the rate at which they'll stop, is now looking to be 4.6% in 2023 versus 4%. That's a big change. And I think it's what people and companies need to wrap their heads around in terms of what their costs are going to be on a debt level perspective, and also the kind of pressure that puts on the valuations of risk assets. And that's why you're seeing this repricing occur in the market. Importantly here as well, and this is going to get a lot of attention, is we are seeing an inversion of the yield curve. Not to be boring here, but it's basically when the 10-year yield is lower than the 2-year yield. The 2 years at about 4.1%, the 10 years at 3.6%. That's the fixed income market telling you that they are very much anticipating a recession. Normally, if you were to go out 10 years, you would expect things would be optimistic and better and therefore a little bit higher on the rate front. That's not what they're telling us right now. They actually think, the fixed income market and other investors as well, that the Fed is going to go too far, too fast in raising rates and cause a hard landing. Those are the words that are being talked about right now. So that's something to know. The other aspect, of course, when we think about the equity markets and why they continue to decline, is because investors are believing that with a recession and a more difficult backdrop, that the earnings estimates of all these companies in the S&P as well as the Dow and the TSX have to be revised lower. So you lower the earnings, you perhaps put a lower multiple, and therefore you've got lower valuations. So that's kind of where we stand right now. I would also just point out from a central bank perspective that 8 other central bankers around the world are also raising rates. We've just heard from the BOE raising rates, South Africa, Switzerland, Norway, Indonesia, and even the Philippines, all raising rates. Now, what we are talking about really is the narrative in the marketplace is very much on the bear side. And in fact, there's an institutional survey that takes place, only 17% are bullish. And there's the bull versus bear spread. It's the worst we've seen. In other words, more bears than bulls. Then in the dot-com era and even during the pandemic, and as close to the levels we saw during the great financial crisis. So again, bottom line, investors are fearful that the Fed is going to go too far, too fast and cause a hard landing. I'll just give you the slight small bull case scenario, which some strategists are pointing out that the trend growth is still strong, expecting 7.1% in back half of 2022 for the S&P 500 earnings, and 9% in the back half of 2023. So not bad growth. We'll see if that's actually what will happen given the inflation concerns, etc. We are seeing the TSX also trend lower, of course. The Canadian dollar is lower versus the US dollar. In fact, the worst levels we've seen for the Canadian dollar since July of 2020. The focus here, of course, is on inflation, CPI coming in at 7%, less than expected. and down from 7.6%, but food prices are up over 10%, the fastest pace in over 40 years. The question, of course, here in Canada is, again, whether or not we will be able to orchestrate a soft landing. We know that the BOC is going to continue to also raise rates, and that, of course, has an impact on consumer demand and also, of course, the housing market. What I find so interesting, though, is that even though we're also raising rates, the Canadian dollar is continuing to trend lower. That's the market telling you that they are quite fearful. You can see this always playing out in currencies of the Canadian economy, and of course the fact that we don't use our energy resources to the degree that we could. In terms of stocks to watch, I would just point out in the steel space, Stelco, that's up by about 10%. They're doing an issue or bid at $35. Eli Lilly is up by 3.5%. It was upgraded over at UBS. And then also we have a bit of a mixed picture as it relates to the housing stocks, with Lennar showing some good strength, up by about 2%, but KB Home's a little bit weaker on the order front. And also I would just point out that DRI, Darden Restaurants, saw softer sales at the Olive Garden and Longhorn Steakhouse. Nima, I'll leave it there. A lot of stocks to watch and a bit of a mixed picture. Back to you.
All right, thanks for that, Catherine. Again, that was Catherine Murray, host of The Buck Stops Here, which airs Sunday mornings at 9 a.m. Eastern, only on the News Forum Network. All right, stay with us. More international headlines up next. Well, after 2 years of discourse dominated by the COVID-19 pandemic, the war in Ukraine has taken center stage at this year's UN General Assembly. The pleas for peace made by leaders worldwide showed concern for both the plight of Ukrainians and the impact of the war on the world. The repercussions of the Russian invasion have been felt even thousands of miles away. Ukrainian President Volodymyr Zelensky told the assembly via video that Mr. Putin's escalation proves that he is not serious about negotiating an end to the conflict. All right, well, meanwhile, a top Ukrainian government economist says the country's efforts to defend itself from Russia are resulting in a severe financial burden. He says Ukraine can only bear that burden with the help of outside support. Oleg Ustenko is the chief economic advisor to Ukrainian President Volodymyr Zelensky. He said the speed of victory will depend in large part on the pressure that Ukraine's allies place on Russia. Mr. Ustenko told the Associated Press that it was ridiculous for European countries to keep paying for Russian fossil fuels. He called for an EU oil embargo to be brought forward and a price cap imposed on Russian gas. Well, as Hurricane Fiona makes its way north from the Caribbean, authorities are still struggling to reach people stranded across Puerto Rico. This comes 4 days after the hurricane slammed the U.S. territory. It caused historic flooding and smashed roads and bridges. Government officials are working with religious groups, nonprofits, and others who are braving landslides, thick mud, and broken asphalt to provide food, water, and medicine to people in need. At least 6 municipalities have areas cut off by the storm. Well, this comes as a powerful 6.8 magnitude earthquake has struck Mexico. It caused at least 2 deaths, damaged buildings, and set off landslides. The earthquake struck at 1:19 a.m. This was near the epicenter of a magnitude 7.6 quake that hit 3 days earlier in the western state of Michoacan. Mexico City's mayor said on Twitter that 2 people have died, a woman who fell down the stairs of her home and a man who had a heart attack. Turning to violent protests in Iran following the death of a 22-year-old woman in police custody. Clashes between security forces and protesters have killed at least 9 people. Now, that's according to a tally by the Associated Press based on statements from Iranian media. Widespread outages of Instagram and WhatsApp have also persisted. The demonstrations began as an emotional outpouring over the death of Mahsa Amini. She was a young woman held by the country's morality police for allegedly violating its strictly enforced dress code. All right, well, violence can also be seen in Myanmar, where a United Nations appointed human rights expert says many are facing a living hell. He is calling for governments and companies to coordinate efforts to cut off the military-led government of Myanmar from its sources of revenue and weapons. Tom Andrews says life in the Southeastern Asian nation has become very difficult for many since the generals seized power last year. Mr. Andrews says many countries have been imposing sanctions on individuals, military entities, financial institutions, and energy companies, but coordinated action is needed. Tennis star Novak Djokovic is still awaiting word on whether he will be allowed to return to the Australian Open early next year. The 21-time Grand Slam champion missed the tournament this year. This was because he was not vaccinated against COVID-19, and he was deported from Australia after a legal saga. Mr. Djokovic says he's hoping for positive news, but the 35-year-old has insisted that he will not be getting a jab to protect against COVID. Tesla is recalling more than 1 million vehicles in the U.S. because the windows can pinch a person's fingers when being rolled up. Tesla says in documents posted by U.S. safety regulators that the automatic window reversal system may not react correctly after detecting an obstruction. Tesla says an online software update will fix the problem. Researchers at Washington State University in the U.S. believe that 3D printing could be the answer to make space travel cheaper and easier. All that's needed is a little Martian dust. The team managed to make tools with a 3D printer using between 5 and 100% Martian regolith, which is a black powdery substance collected from the surface of Mars. The tools that were made with just 5% Martian dust were much lighter than those made with titanium alloys. The components made entirely of regolith were brittle and cracked easily. But one researcher believes that the 100% Martian rock material would work as great coating. All right, take care, Canada. We'll see you next time on Forum Daily News.